The markets are rallying on an expectation of Fed tapering, and we can see the Fed's injection of liquidity into the financial system has reduced credit spreads, and therefore the contagion and risk within the banking system. However, OPEC Plus, they decided to throw a spanner in the works, and that's why their cuts have seen oil just surge. There is a widely held belief that the Fed will just start tapering. That's not what the statistics are telling us. 59.1% probability of a 25 basis point increase. Non-farm payrolls, average hourly earnings, and the unemployment rate is coming out this Friday. What will all this do to markets? Stay tuned, you're going to find out. Hi everyone, I'm Ken from CryptoTradingKS. My goal is to help you to be your own financial advisor, thereby being more of a financial blessing to yourself and those you love, and also gaining real wealth and positive excellence in the process. If that sounds good to you, please subscribe to our beautiful global family. What we can see here, markets around the world have been rallying. Look at the Nasdaq and look at Bitcoin. They've thrown in a fantastic rally up. The S&P 500 just commencing. And when we look around the entire world, the risk on sentiment is right there. We can see it in the charts. If you're new, a very warm welcome, and welcome back, KS family. So let's run the numbers. One thing that you can see, the markets are quite overextended, and when we look at the absolute cataclysmic drop down on the VIX, this is a really substantial move for the VIX to go under. And we've seen the Nasdaq and the major indices rally up. The bonds are showing us that the bond market doesn't know whether it's coming or going. The dollar continues to sell down. Gold is strengthening, and we saw that big jump in oil prices as OPEC Plus limited production. We can see a little bit of risk-off appetite in terms of what's happening with Bitcoin's price momentum, as well as junk bonds and high-yield corporate bonds. To see what's happening in terms of smart money movements, we need to turn on the CTKS method. This method is formed through all of price action, not just recent price action, and we don't fit current price action to make it look suitable. You have to only look at any news station. Watch and observe what they do. They always draw a trend line to current price. That's a no-no. Ken, why is that bad? Everybody does it. Exactly. People are doing it because the financial markets are not looked through scientific eyes, they're looked through emotional eyes. People are looking for a pattern that isn't there. What we do with the CTKS method, we mark up all of price history. And what do we see happening with the S&P 500? The S&P 500 is hitting a lot of smart money sell areas. This is actually why Bitcoin is having a little bit of problem getting above where it is now, and why junk bonds and corporate high-yield debt is coming down. All markets are intercorrelated and interconnected. A lot of people inside the market, the retail herd, is believing that the Fed will pivot. I've actually shown you that that's not on the cards as far as what traders think. And when we look at the federal funds rate, why have I drawn that circle there? What's that all about? You can see that the 2-year yield has actually crossed under the federal funds rate. What this actually means is the bond market is saying, oh no, there's a problem. That's why bond prices have been going up. That's why the move has been spiking. Just be aware, it takes a long time for these things to play out in the main financial markets. As the S&P 500 comes into a very heavy sell area, the CTKS risk indicator is experiencing a little bit of risk-off behavior, and Bitcoin is also experiencing that. What we've seen recently, junk bonds, high-yield corporate bonds, and bond option volatility all stage a bit of a recovery. This is fantastic, as well as inverse credit risk. It's very important that inverse credit risk starts to go up, because that gives you a fairly good indication as to where the markets can go. So far, we're seeing the markets react very, very well. When we were in 2020, there was a very climactic sell down, and look at what the signal inverse credit risk actually threw. It's a very, very good signal to keep your eyes on. The major indices are acting like, and I'm talking about all around the world, they're acting like everything is fine. There's no banking crisis, don't worry about it. But when we look more deeply, we can see there are problems within the banking sector. Just have a look at how the top 15 US banks have all been crushed, with the Silicon Valley Bank and a large range of other banks causing financial stress on the main economy. We're seeing the top 10 European banks also suffering a bit of problems as well, but not to the degree the US banks did. One exceptional way to understand where the main markets could be going is to look at Bitcoin. Bitcoin is an incredibly sensitive risk-on and risk-off asset class. There's so much misinformation about crypto, it's absolutely mind-numbing. What are we looking at here? Here's the S&P 500 futures. You can see the S&P 500 futures are indicating positive momentum where Bitcoin is weakening. What does this actually mean? It means the smart money is not too sure we're going to get through that very heavy overhead resistance on the S&P 500. Not sure and can't are two different words. One thing that we do, we mark up our charts with the CTKS method, which helps us to understand where the smart money buy and sell levels are. And what you'll find, the price is always pinging between the two. If you understand where to buy and where to sell, and where smart money is buying and smart money is selling, that is a very, very powerful tool. Bitcoin is currently trading at 28,115. It's currently above a smart money buy zone from 27,843 to 28,038. One thing to note, Bitcoin is showing weakness, but that doesn't mean it can't get strong again. Smart money loves to desynchronize the market. From today, I'd like you to try something new. For example, if you said there's a 70% probability of Bitcoin going higher, you're actually predicting what could happen to the S&P 500. And what happens to the S&P happens to all major indices all around the world, and it flows through to stocks. When the major indices sell down, what happens to stocks? Please let me know in the comments. This is a very, very important question to ask yourself. It's just all part of your active learning. Coming back to that concept, if you think there's a 70% probability the price could come up, just take a note of that. That means, what do you give the percentage probability of it just going flat or going down? That's also important. You always want to think in terms of 3 dimensions. And of course, you can just zoom out and do this on longer term time frames. Tomorrow, you'll see exactly what the market did and then start to compare your percentages with what the market did. You'll find you get better and better and better at predicting price behavior. What I just covered off is the practical application of the CTKS code. This is daily 3-dimensional risk management. You never want to be caught in a position where you say, I don't know what to do. The market is just imploding. I have no idea. What am I going to do? I don't know. And you panic and you make a wrong decision. And it can go the other way. The market's exploding. Do I get in? What am I going to do? I'll wait for a while. If it continues to go up, then I'll buy. And this often leads to people to buy at the top. And of course, the inverse is selling at the bottom. It's very, very common. If you do those things, or you've found you've done those things in the past, that's just simply desynchronization. The market is designed to desynchronize you. To be your own financial advisor, you must raise your synchronization. And I think the best way to do it is this CTKS code. And it's important to do it every day. The next thing is look very extensively throughout the market. Make sure you know what you're doing, that you have the foundations. Look beyond the charts. Come back into the charts and find the market's focus. Enhancing your pattern recognition is incredibly important before you buy and sell. And there's so many ways to do that. You must master fear. You must master emotional control. And this is very easily said and very difficult to do. For example, in applying the CTKS code, you might think you always assess the down probability first, the neutral second, and the up case last. You might think there's a 20% probability that we're going to end lower in 24 hours. And it really depends what time you do this code. You can just put it on your chart if you want. You might think there's about a 10% probability that price will go neutral, and the remaining percentage is up, so 70% up. And then you can just flip back in 24 hours time and see how you went. We'll just focus on the very initial part of the CTKS code in this particular video. You must make your own assessments. The assessment that a person would make here is very different than the assessment the person would make there if they just tuned in hours later. You must be aware of these things. Time zone has an incredible impact on your code. If you don't do your code, you will be continuously desynchronized from the market. I can guarantee it, unfortunately. I would suggest that just for the next couple of videos, you just put up the first part of the code, this particular part, just what you think the market will do in the next 24 hours. Don't worry about being right in another person's time zone, because you don't know when that time zone will occur. You could have said, for example, down 20%, neutral 10%, and up 70%. And then looked at the market up here and said, yeah, correct. And then you just sold whatever trades that you were working on. But if somebody looked at your code down here, they would say, oh, your code was wrong because it went down. It depends on your time zone. And please don't care about what other people think. It's not important. What is important is that you learn and you do your active learning. You cannot be your own financial advisor without doing this kind of analysis. Inside the masterclass, we do deep dives into just about everything, and what we miss become live videos because the market is always changing its own nature. And that's what the LV video series is all about. One thing that you see in Timing 14 or TM14 is that we look at stable coins. When we're looking at stable coins, and remember Bitcoin is a very risky asset, it's very, very volatile. We can see such a flow into Tether, USDT. That flow is starting to top out. This should bear in mind some of the things that have happened previously when Tether tends to top out. And we can see USDC, BUSD, and the DAI stablecoin, literally all of that money is being adopted by Tether. Or it's leaving the crypto market and it's being taken up by bonds or even gold. But did you know you can buy gold in the crypto market? It's called PAXG. If you would like to find out more about the CTKS Masterclass, please pop across to cryptotechnicalanalysis.org. The link is in the description of this video, and also reach out to the CTKS ambassadors. Also, to let you know, someone you know very kindly offered a CTKS partial masterclass scholarship. That is still on offer. How do you get these scholarships? You need to show positive excellence and commitment. Simply applying doesn't mean you're going to get awarded. You need to put in the work because the masterclass is pretty big and it's demanding. It's effectively 30 plus years of knowledge transfer in financial markets. And because I am a financial inventor, I actually look at the markets incredibly different to anybody else. And that's what you need. You need an edge inside financial markets. In TG34, we talk about the longs and the shorts. This is really good to look at. Recently, we saw the longs lose confidence and just come out of the crypto market as the shorts gathered momentum. At the moment, the shorts are gathering more confidence. We need to keep our eyes on these things. In the past 24 hours, we've seen about 150 million in total liquidations across nearly 44 100,000 positions. And if you don't want to get liquidated, just buy at spot. That's all you need to do. And you own it forever. When we look at liquidations, total liquidations, across the past 24 hours, about 60% were long. What about the past 12 hours? Went the other way, 71% short. What about the past 4 hours? What do we see? 78% short. And what about the past hour? About 77% short. This is a really good thing to keep your eye on. Why is that? Because when the longs start to curl around and the shorts start to get liquidated, you can predict higher prices, and you can also predict lower prices when the exact inverse occurs. Something to keep your eye on. The markets love to desynchronize everybody, so just bear in mind, whatever's happening inside the market, there's always a desynchronization element about it. A lot of people say the market must come down. As soon as you say must or will, you're already on the wrong side of the percentage. Because the markets don't have to do anything. They're very, very irrational. That's why you just have to look at what price is actually doing. And you need to look at a lot of different data points. We can see that Bitcoin has just come down slightly, just a little under 1% in the past 24 hours. And look at Doge. Doge has just exploded, up a little over 24% in the past 24 hours. Keep your eyes on groupings. SHIB is up a little over 5% in the past 24 hours. Looking at the greatest gainers, we can see Doge number 1, then followed by Rune, SHIB, BAT, Chiliz, Injective, Solar, SXP, and Gemini Dollar, which is a stablecoin, so we'll ignore that. The greatest losers in the past 24 hours, HBAR, Stacks, XRP, Conflux, Synthetics, Mask, FEI, and EOS. Thank you everybody for the fantastic comments in yesterday's video. I suggest that you look through the comments each day. We have an incredible global family. So much wisdom and so much compassion and kindness is there. Let's turn to the top crypto's gravity, because this can give you a very good inside edge where Bitcoin could be going. What do we see with Bitcoin at the moment? We know that it's actually tapped that smart money buy area and is slightly above another smart money buy area. So there's a degree of support within Bitcoin structure, but things can move around pretty dramatically, pretty quickly. So we need to turn to the alts to see what they might be doing as well. What do we see with Ethereum? We can see a bit of a flight to safety with ETH. It's stronger than Bitcoin at the moment. This is good. This is what we want to see. BNB is currently under Bitcoin's gravity. I just posted something on Twitter a little while back. People were saying that CZ has an Interpol red notice against him. There is no such thing. And I put a tweet which basically took screenshots of the Interpol red notice website, and he's not there. Please do your own research. If you want to become your own financial advisor, you must DYOR, do your own research, because if you don't, other people will be controlling what you think. Please don't do that. You must control your own thoughts. We can see that BNB is currently weaker than Bitcoin. XRP had a monstrous run up and it's come back into alignment with Bitcoin's gravity. It's now weaker. We always say the strong become weak, but the weak also become strong. Please bear that one in mind. And we can see that Doge has knocked ADA down one peg, and it's currently doing very, very well. It's literally up 34%. Well done, Doge. And what about ADA? ADA was showing a lot of strength just in the past couple of days. We saw XRP showing strength first, then ADA showing strength, and now Doge showing strength. Keep your eyes on what is moving. That is gravity. We can see there's an alignment between gravity and prices, but now we must turn to relativity. What are we seeing with Ethereum versus Bitcoin? Currently, Bitcoin is outperforming Ethereum. Don't forget, there's a difference between gravity and relativity. What about BNB? BNB is seriously underwater compared to Bitcoin. What about XRP? XRP has done incredibly well. You can see that there's a very, very big difference between gravity and relativity. I go into this in fine depth inside the masterclass, and it's a skill you must know. Crypto is notorious for absolute explosions in price and also, unfortunately, implosions. We can see Doge has exploded, up 33% relative to Bitcoin's about 7% up. And we can also see that ADA has done incredibly well. What did we see when XRP shot up? It just literally did a moonshot. It came up about the same amount as Doge. What followed then? A lot of retail investors and traders got very, very interested in XRP, and then it came down, and then they sold, and then it went up, and then they bought, and then it went down, and then they sold. This is the market trying to desynchronize you. Please be aware of this. But what we can see, price is always moving in a wave, and hopefully XRP wins the case against the SEC. It's looking actually quite strong. When we talk about price moving in a wave, it always does this. It goes up, then it comes down, goes up, comes down, goes up, comes down. This is just price moving in a wave. What you want to do is you want to make that volatility your best friend. When you find something with the market's interest, it's really good to just jump on board and see what you can do with it. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.